Welcome to Stocks Review. Today we are going to take a look at Visa. Stock ticker symbol V. It is headquartered in the USA and service regions all around the world. The service region may give us a clue of the company's overall stability and long-term growth potential. It has a market cap of $444 billion and is considered a mega cap company. The market cap is an important metric because companies with larger market cap often have more pricing power, liquidity, and lower failure rate, whereas companies with smaller market cap tend to have more growth potential. What sector and industry the company is in greatly influences its ability to deal with market uncertainty. It is in the financial sector and credit services industry. Visa operates as a payments technology company worldwide. The company facilitates digital payments among consumers, merchants, financial institutions, businesses, strategic partners, and government entities. It operates VisaNet, a transaction processing network that enables authorization, clearing, and settlement of payment transactions. In addition, the company offers card products, platforms, and value-added services. It provides its services under the Visa Electron, Interlink, VPAY, and Plus brands. In short, it is a major credit card payment service company. Despite its recent drop, it has a 5-year price return of 138% and outperforms the SPY. The 5-year price chart may help us evaluate how a company performed recently and its ability to weather global events, such as trade war, pandemic, and supply chain issues. It has a 5-year compound annual revenue growth rate of 9.8%. The revenue growth is consistent and the revenue trend looks very strong. The revenue trend is important as growing companies often have sales go up first followed by profit growth. On the other hand, when sales become stagnant, it may also give us a hint that the growth phase of the company may come to an end if no critical change is made. The net income is growing. The net income trend looks very good, as it can grow its profit consistently. The net income is one of the most important metrics an investor should be aware of. In the long term, stocks always follow the earnings trend. It has been buying back some shares with shares decreasing gradually. We should always follow closely if a company is buying back or issuing more shares, as both of these activities greatly impact the return shareholders can get. It has a small dividend and has been growing at a steady rate recently. The dividend history gives us a peek of a company's cash flow stability. The overall shareholder return of Visa is very good and significantly outperforms the historical performance of the SPY. The total return and annual growth rate history of a company can show us what the performance trend was and how it had navigated through difficult times. Most companies tend to perform similarly with a slight decline in growth as time goes by. Visa has a 14-year total return of 1,126% with a 14-year compound annual growth rate of 18.9%. If you had $1,000 invested 14 years ago, you would have $11,260 now. Currently, the price is at around $214 with a 52-week high at $252 and 52-week low at $187. It is near the lower end of its 52-week range. It has a P/E ratio of 33 and forward P/E ratio of 30. It has a cash position of $12.3 billion and long-term liabilities of around $27 billion. The ratio of cash, debt, and market cap may help us evaluate the default or bankruptcy risk and what percent of your share is eroded by debt. Higher debt also has a higher cost in an elevated interest environment. Visa is considered a wide moat company according to Morningstar's rating. Now, about the future projection. Currently the margin is 51.1% and future margin after 5 years is expected to be 53.3%. The margin is expected to be stable after 5 years. The company's margin and moat reflects the pricing power of the company, and the projected trend is also important. We want to own a company that is able to stay profitable and relevant. It has a 5-year forecast revenue compound annual growth rate of 13.5% and 5-year forecast EPS compound annual growth rate of 9.9%. The near-term growth is expected to be good. It has beaten all of analyst consensus EPS estimates in the last 4 quarters. Looks like it's on the right track to success. The overall analyst recommendation rating is a buy with trend shifting towards buy recently. The rating trend gives us a clue of the changes of what analysts thought about the stock. Out of 37 analyst 1-year price targets, the range is 225 to 310 with an average price of 269, which is well above the current stock price. The discounted free cash flow model is a widely accepted method for valuing a company. Here we present 3 kinds of discounted free cash flow model results for a more comprehensive review. If we run the DCF perpetuity growth model, the fair price is 263 with an upside of 23.5%. If we run the DCF terminal EBITDA model, the fair price is 242 with an upside of 13.5%. If we run the DCF terminal revenue model, the fair price is 191 with a downside of 10%. Now we compare Visa with U.S. Treasuries and SPY. It cannot be emphasized more that the U.S. 10-year Treasury yield is one of the most important numbers to keep in mind when investing in stocks. The 10-year Treasury yield affects the valuation multiple of stocks like gravity. The higher it is, the lower the stocks are valued, including all the S&P 500 companies and all the stocks in the world. Currently, the 10-year Treasury yield is around 2.88%. The SPY is considered one of the safest and most liquid ETF for investing in the stock market. Big funds and investors directly compare the risk and return of investing in SPY or in individual stocks. The historical return of all stocks follow the earnings trend long term. However, the real return is often reflected by a mix of dividend and buybacks together with revenue or profit growth affecting the valuation. The return yield of SPY is at around 10%. The SPY has an average forward PE around 19 now. Visa has a dividend plus 10-year growth forecast plus shares buyback yield at 11% and a forward PE around 30. We have to be cautious that this is just a rough prediction of Visa's future performance. The forecast can be changed at any time, and the actual revenue or net income the company is able to get depends heavily on the true market condition. Looks like Visa is more expensive than the SPY, and SPY looks like a better buy with a more stable return estimate. We will try to summarize all the information above to give us an overall impression of Visa. In summary, Visa is a mega-cap good company with small growth and wide moat, and probably overvalued now. If Visa can grow at a faster pace surpassing estimates as it usually does, then it may be a good buy and hold long term. Now that's a review for Visa stock. Click the subscribe button for more up-to-date stocks review. If you like our content, leave us a comment and click the like button to give us some support. We hope to see you next time.